Welcome back. This is Jacob Milliken at 9M Investments, and this is September ETF Investment Flows. So, looking over the last month, the equity portion of the flows definitely took in the lion's shares of flows that were coming in, but fixed income had a fairly large number as well. But what was interesting about this is there was a lot of changes up and down over that last month. And last week, an example, there was actually outflows overall from the ETF universe, which is very rare in this point in time. So again, investors overall were very bullish, pushing into equity type funds, but pulling back quite aggressively in equities last week, and then overall taking their money out of investments altogether. So very interesting from that standpoint that investors are kind of suffering whiplash. Obviously the Fed announcement for rates for longer probably had a lot to do with that. But if I'm an investor and I hear that, maybe that's an area where I would go into fixed income, but that is not what investors actually did last week. Looking at it from a standpoint of where were they going, what sectors were they going into? Uh, Again, over the last month, equities overall, but fixed income on the government side, fixed income on the municipal side, fixed income just kind of broad based were the next four after equity. So still a lot of going into fixed income over the last week. As you can see, kind of the same thing. A little bit bigger, lower number going into, a bigger number going into fixed income government side. Again, the Fed announcement, kind of that chase to safety, if you will, doesn't kind of surprise me that led the week last week. Jumping into the individual names over the last month, the SPY, IVV, VOO, all S&P 500 based funds took in a good amount of shares. Invesco's QQQ is another one that when our investors are feeling good, they tend to get big flows. But beyond that, muni bonds, total bond market, treasury, another one that's both focused on treasuries, took in big numbers. Anything over a billion within the ETF world is a big month for the most part. Looking into over the last week, well, what is interesting here, again, over the last month, SPY took in 9.8 billion. That big portion of that all happened last week. Beyond that, within the last week, this is where you can really see the big change of people moving into those treasury type bonds. Vanguard's intermediate, VGIT, total bond, the tilt, the 20-year treasury bond, more T-bill type funds. So investors really trying to run to safety. Again, and QQQ is one of those ones that I always kind of measure as how investors are feeling. When there's huge flows out, investors are feeling bearish. When huge flows in, investors are feeling bullish. Again, over the month, they were feeling bullish, but then within this last week, pulling big dollars from those types of investments. Tilt is an interesting one. Over the last 2 months, lots of shares, big flows into this. But then if you look over the last month, investors didn't really know what they wanted to do with this. Halfway through the month, cumulative flows negative almost $500 million. And then from there, some big days up and down. So investors really trying to figure out what they're doing, what they're going to do from day to day, it seems like. And, again, this announcement from the Fed was made the week before of, higher rates for possibly longer, possibly even rate hikes. Um, Investors moving into the 20-year based on that, and then I guess changing their mind the last few days is like maybe that isn't the place I want to be. So again, I think investors have a lot of confusion of what is the right place to be, where can I get protection. A lot of times, especially with the interest rates where they are, T-bills can get you a decent rate of return there that didn't exist a year ago, 2 years ago. So, investors kind of pushing into that. But over the last couple of months, investors were feeling bullish, didn't want to miss out on some of those gains. And of course, as those gains reverse, kind of scrambling of what to do next. So a lot of money going into kind of areas that they had just taken out just weeks before. So really kind of flip-flopping back and forth. And again, as a portfolio builder, is this how we want to run our investments, kind of flipping back and forth between what is happening in the markets? obviously this is what we want to do. So anyway, I hope this was helpful, and you have any questions, please reach out. Otherwise, have a great week, and we'll see you next time.